Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin. It is the alternative. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. I'm going to try to tell a story, okay? And I don't really think that I'm the best storyteller, but it all originates from a common saying that people who only buy equities like to say, and that is, namely, they'll say, there is no alternative. Okay? So this is the idea, right? There is no alternative. Where does this come from? Why do they say there is no alternative? The reason they say that is because when you come to bearish phases of the market, like we've been experiencing over the last several months, and how everything seems to be stuck in traffic on Struggle Street and having a hard time playing in higher prices, a lot of people that like to invest in equities, which again, I like to invest in equities too, but the ones that only like to invest in equities, they'll say there is no alternative. Or Tina, there is no alternative. The reason they say this is because even during a bear market for stocks, right? Even during, even when the market goes down, and you might wonder, okay, well, I don't want to put my money in investing because I'm worried that they're just going to keep going down. The argument is, where else are you going to put it, right? Like, what else are you going to do with it? Are you just going to leave it in your bank account and let it lose value to inflation over the next several years, right? So that's where the idea of there is no alternative comes from, okay? And the idea is generally that, yeah, there are bear markets in the S&P, but guess what, right? I mean, the overall trend theoretically should remain up, okay? So that's where it comes from. There is no alternative. Where else are you going to put your money if you're not going to put it in the stock market? Exhibit A, Bitcoin. Okay, now I'm going to talk about Bitcoin here, and I'm going to talk about the risk involved too. I'm not trying to just blow smoke. Okay, I want to talk about kind of where we are. But one of the most common things I see people say involve, it's too volatile. Okay, it's too volatile for me, therefore I don't want to deal with it. Well, the first thing to consider with Bitcoin is that it generally goes up as a function of time. And it's best modeled with logarithmic regression. And we oscillate around this regression curve, right? We sort of just oscillate around here. And we go through bearish phases and we go through bullish phases. And we go undervalued and we go overvalued, and back and forth it goes. And everyone always uses the major bear markets as the reason they don't want to buy Bitcoin, because it's too volatile, right? It's too volatile. And why would you want to hold an asset that can go down 80%, right? Why would you want to hold an asset that can go down 80%? The problem herein relies on the fact that they cherry pick the top, okay? So what we like to do, we like to cherry pick the top, when in actuality, there are very few people that actually bought the exact top, right? I mean, if you just DCA something, if you're putting money into index funds, I imagine you're just doing it no matter what, and you're probably frequently buying the top, because the stock market generally goes higher with time, right? It goes higher with time. Now, the counterpoint to a lot of this stuff, to say that, yeah, like it can drop 80%, is to say the fair value goes up as a function of time. Now, what I want to do to try to tell this story is we're going to look at the FAANG stocks. Okay, so Facebook, Apple, Amazon, Netflix, and Google. These are some of the safest stocks that you could pick if history is any indication. Maybe Netflix not so much anymore, but these blue chip stocks have historically done pretty well, and were considered, and are still considered, largely to be relatively safe investments. Now, what I'm going to do is we're going to take a look at that. Here's Facebook. Pretty good return, right? I mean, this is a pretty good return. And as measured from, we'll even cherry pick the bottom, August 2012 to today, Facebook is up 1,100%. Now, that's pretty impressive, right? Pretty impressive over 504 weeks. Facebook is up 1100%. That's a pretty good return. Now, what happens if you measure your investments as measured against Bitcoin as opposed against the US dollar? If you measure it against the US dollar, I mean, congratulations. Like it went up, but part of the reason it went up is because there's a lot more money in circulation. I mean, it's also probably too because the company's turning, theoretically turning profits and blah blah blah. But at the same time, you can't look at this stuff and not account for the money supply, as we've said many times before. Again, if you take, say, like Facebook and divide it by the money supply, you will see that while the return has been somewhat impressive, it's not as impressive when accounting for the money supply. And here it's only up 425%. And you could argue this basically just been flat since April of 2017. Okay, just flat since April of 2017. So then it leads you to wonder, well, what is Facebook's valuation against Bitcoin? Because Bitcoin theoretically increases with time as a function of time. The money supply also increases as a function of time. Why don't we measure Facebook against Bitcoin? This is the chart you get. What's going on here? Well, if it's going down, it means Bitcoin is outperforming Facebook. If you think about it, Facebook, the valuation of Facebook divided by Bitcoin, if the numerator gets small, then you divide it and say Bitcoin stays the same, then you're dividing a smaller number by a larger number, therefore it's going to go down. Or if Bitcoin goes up without Facebook going up, or Bitcoin goes up quicker than Facebook, then it goes down, right? You can imagine if Facebook is worth 1 and Bitcoin is worth 2, that's 0.5. But then later, if Bitcoin is worth, say, 3 and Facebook is still worth 1, then 1/3 is less than 1/2. Therefore, this is going to continue to go down. Now, what is the return on your Facebook investment compared to Bitcoin? Let's cherry pick the top, or the beginning of the data. So if you had bought if you had bought Facebook in May 2012, even though it went up 1100%, and you compared it to its Bitcoin return, you are now down 99.94%, meaning yes, your valuation against the US dollar went up 1100%. So what? I mean, so did a lot of things, right? You're down 99.94% when compared to Bitcoin. And what's interesting is you might say, well, you're cherry picking. Why don't we pick the 2017 all-time high for Bitcoin? We'll cherry pick the all-time mania phase back then. Even if you had bought Bitcoin, or even if you had bought Facebook at the 2017 peak for Bitcoin, you would still be down 48%. Okay? Now, temporarily it would have gone up, right? Temporarily, but Bitcoin has a way of, as time goes on, it normally goes to a new level, right? So, it comes down, it bounces back up, and then it comes down and back up, and then does something like this, right? But usually it eventually finds this ratio to a lower and lower level. And so eventually the idea is that it will likely just continue to go down as a function of time. And so then the argument is, why is Bitcoin not an alternative, right? If you're going to say you're only going to buy stocks because there is no alternative, I mean, is an alternative that outperforms, the asset of choice that you have by, almost, an amount that almost puts it down negative 100%. Is that not worthwhile? I mean, obviously it's not down 100%. It's down 99.94% over the last decade or so. That's a pretty big loss in terms of its Bitcoin valuation. Now let's go on over to Amazon. Now, I like Amazon as much as the next person. I like to get I like to order stuff and get it 2 days later. And man, this looks like a good chart. Does it not? If you measure it from the bottom when it first launched over here, it is up 220,000%. Amazon is up 220,000%. As measured from when, say, Bitcoin launched in January of 2009, let's go find January of 2009 right here. Amazon is up 5,000%. Now, even though Amazon has done exceptionally well over the last decade, how does it compare against Bitcoin? Well, it's down significantly still. right? It's still down a lot. And since the launch, I'm not even gonna go cherry pick these wicks, but if you take it from the launch, it rounds it down to 100%. Obviously, it's not 100%, but if you cherry pick it from say the 2013 top, it's down 76%, and it's essentially at break even, approximately break even when comparing to the 2017 mania phase. So had you bought Bitcoin or Amazon at Bitcoin's 2017 peak, you would actually be at break even when compared to say buying Amazon, which was not at a major peak. Okay, so peak craziness for Bitcoin occurred right here. So even if you had bought Bitcoin right there, where we know that it went through an 85% bear market and Amazon kept climbing higher, Bitcoin is still at par with it, even if you bought it on the day of the peak and you were the worst investor in the world, right? You bought it on the peak, you'd still be on par with Amazon. And you probably wouldn't have bought it just at the peak. You probably would have had some buys maybe at 12,000 or somewhere below as well. So it's an interesting thing to look at. Now, what about Apple? I love Apple, right? I mean, it's one of my favorite companies. I really do like Apple. I have a lot of their products, and I own this stock as well. So, just for a typical disclaimer, but over the course of its lifetime here, you can see that Apple is up a very modest 319,000%. And since Bitcoin launched in January of 2009, so let's go all the way and look at January of 2009, you can see that Apple is up around 5,000%, almost 5,200% during that time frame. Pretty good, right? But again, when you compare Apple to its Bitcoin valuation, it's down, if you round it, 100%, right? It's not technically 100% because, Apple still has value, okay? But compared to what Bitcoin has done over the last several years, you can see that it's actually down. If you cherry pick, say, the 2011 top for Bitcoin, Apple is still down 99% against Bitcoin. If you cherry pick the 2013 one, it's still down 74%. If you did cherry pick the 2017 one, Apple is actually up 80%. But at the most recent bottoms or tops for Bitcoin, you can see that Bitcoin had actually outperformed. Apple's a good company, okay? And what this chart shows, is that Apple has been a good investment over the last several years, about as good as Bitcoin. But over the entire lifespan of Bitcoin, Apple has underperformed, mainly because a lot of the major moves for Apple, occurred a lot earlier on, which, gets it to those several 100,000% later on, so these moves over here. But it is something to consider. And so when people say, there is no alternative, I'm like, well, have you heard of Bitcoin? It generally goes up with time, albeit with some bear markets in between, but it generally goes higher with time. Now, don't even get me started on Netflix, right? Don't say Bitcoin's too volatile with you if you're holding FAANG stocks and you're looking at 71% drop, 72% drop in Netflix, which is supposed to be a blue chip stock. If something like that can drop 71% or 72%, and you're going to sit on that and say that's okay, but not be willing to say the same thing for Bitcoin, then I think you're cherry picking to some degree. And if you look at the Netflix Bitcoin valuation, by the way, over the last several years, you can see it also rounds down to 100% down against Bitcoin. If you cherry pick the 2013 top, it's down 88%. If you cherry pick the 2017 top, Netflix is down 51%. So even if you're the worst investor in 2017 and bought Bitcoin at its top, it still would have outperformed Netflix over the last several years, and you would still be down on Netflix against your Bitcoin valuation had you bought at Bitcoin's top by 51%. Pretty crazy to think about. Google. Everyone knows Google. Everyone. We all use Google all the time. Google from inception here, or I guess this isn't from inception. This is the Class C. But Google, as we all know, is up a lot over the years, and we'll just go ahead and measure it from what this chart is showing. I will quickly show how down Google is over the last several years against Bitcoin, and you can see that Google is down 97, 98% as measured from the 2017 all-time high for Bitcoin. It's about a break even. So again, even if you bought Bitcoin at the worst possible time, it would still be in 2017, it would still be break even today. And then it actually has outperformed Google on the most recent parabolic rally to the tune of 42% as measured from this cherry-picked wick. But if you just take it from an accumulation phase, you can see that Bitcoin outperformed Google by approximately 80% or so during, over the last couple of years. So again, when you look at all these stocks and you say, I don't want to hold anything else because everything else is too volatile, you should remember that Bitcoin is volatile. And yes, it can experience bear markets, but the general direction is up, right? The general direction is up. If you don't like that I cherry pick some certain stocks, you can also just look at the NASDAQ. The NASDAQ has obviously done very well over the last several decades. And if you look at the NASDAQ Bitcoin valuation, once again, you can see that it trends down with time, meaning Bitcoin outperforms the NASDAQ over time. You just have to be patient. I hope this makes sense. So what I'm trying to say is that a lot of people like to say that they don't want to buy Bitcoin because it's too volatile. But if you're patient, if you just wait, what we normally see is we see Bitcoin, yes, it goes through bear markets, but eventually it just surpasses those prior all-time highs and goes on to new heights, right? Now, if you've made it to this point in the presentation, I will say there are risks involved with Bitcoin, and I'm not going to pretend like they're not. Again, I told you at the beginning, I'm not here to just blow smoke and pretend like there are no risks involved. We know what the risks are, and the risks are essentially if we go into a longer term move to the downside, meaning we don't hold the fair value. The fair value of Bitcoin, according to the fair value logarithmic regression trend line, is currently at around 36.8K. So we're a little bit above that. We're a few $1,000s above that. We sometimes do go undervalued though. Okay. Now, anytime Bitcoin goes undervalued, that's a crazy opportunity to get in on Bitcoin, right? A great opportunity to get on Bitcoin. And arguably, sometimes we can bounce off of the fair value logarithmic regression band like we did in 2013 without going undervalued. That's actually where we are right now. So the risk right now on Bitcoin is that it could go undervalued like it did before, like it's done before. There's also a chance that it might not, like it did in 2013, and then bounce off to new highs. The thing that I want to draw your attention to is the fact that whether it bounces or not, as long as you have a long-term outlook here, it likely is going to continue to trend higher with time, right? So let's even imagine a scenario where it comes back down to these levels. It still will likely take out these prior all-time highs just a couple years down the road. And so don't tell me you don't like Bitcoin volatility, and that's the reason you're only going to stick to equities, especially if you're holding stocks that are down over the last decade 99.99% against Bitcoin. Thank you guys for tuning in. Make sure you subscribe to the channel, give the video a thumbs up. We have Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.